Ravi, welcome to the podcast. Thanks for making the time to join us.
Thanks for having me, Jeff.
I've been looking forward to this conversation because one of the things I love about people that have kind of in your role or from your vantage point is that you get perspective from multiple institutions that are doing some of the same projects, where I think it can be sometimes harder for someone in a single institution to see, where they fit and what the broader industry trends are. So I'd love to just understand, what are the big trends you're seeing with clients in terms of projects they're tackling, priorities they have, things you're working on? Like, what are the big picture trends you're seeing from your vantage point?
So I think one lens, Jeff, that we're obviously seeing people having to react to is what's going on from a macroeconomic perspective
For sure.
of interest rates are going up, and just the volatility around that
Hmm.
is really starting to impact how they make decisions. So we are definitely seeing people look at decision making from a how can I be faster or a little bit more nimble, where I perhaps am not having to overcommit to very long timelines.
Yeah, yeah.
That's one thing we're seeing. I think we're continuing to see probably the same broader trend on the increased digitization around lending. Increasingly, of course, everyone understands how they can both originate on brand and through other strategies now,
Hmm.
using the whole banking as a service move. We're seeing some of this with what rates are doing expand back into deposit origination.
Hmm.
And then the other piece, which I've been finding quite interesting, is just how people have really been thinking about changing the way support is being done, particularly as we're all still in this hybrid work model, with many of our customers still living completely online, right?
Yeah, so I want to dig into a couple of these because I think they're really interesting trends. First, this kind of fast iteration you talk about, the ability to kind of learn to move. What have you seen? There's obviously a technology component to that, but I think there's also a cultural component. I'm curious where you've seen institutions adopt that well, and where they've struggled and what the delta is. So for my bankers listening, like, how do you get to build both at an infrastructure level and at an organizational level the capacity to kind of move more quickly in smaller chunks versus the kind of, I think of it in software terms because that's my background, but like the big releases. We don't want the big releases, we want the cloud style small learnings that compound over time. What have you seen be successful in helping people actually get to that place?
That's interesting. On the organizational side of it, I would say there's perhaps two pieces. One is you know the actual commitment to using some variation of the agile
Hmm.
methodology. Um, Again, we operate within banking, so up to a point, it isn't
Sure.
completely software. But I do increasingly see teams in digital and in other areas really organized in that agile way,
Hmm.
with SME knowledge coming in from their counterparts in compliance or risk in other areas. Uh, and that is a trend. Like it's been super fascinating to see how more and more of our customers, particularly the ones that are moving faster into digital transformation side, are just organized that way.
Hmm.
The other thing I find is also just like, and I'm sure this is a little bit of a management trope of just, you have to allow for failure. Like,
Hmm.
like you want people to fail. If they haven't failed, like we haven't taken enough risk. Obviously, we're not talking about it's banking just within grounds, but just organizationally and culturally, like
Yeah, yeah.
it's okay to fail, right? That's part of it. And I think that is something, it's not always possible, but it is. I do find it being a differentiator, particularly when it comes to attracting and retaining talent,
Yeah.
right?
I always feel like you have to shift that lens too, because nobody likes to say it's okay to fail. What you really want to say is the objective is learning. And so even if your
Exactly.
hypothesis is wrong, as long as you
Mhm.
had, we actually define this now at Upstart for a bunch of our projects. It's not only the business objective we're trying to achieve, but what's the learning objective? And if
Mhm.
we learn the thing, even if we didn't hit the business objective, then
Right.
we've succeeded on a level, because the learning objective and the
Right.
speed to learn is really one of the critical things. So you've got to kind of, I think of that as like, if you
Yeah.
learn something valuable, it's not a failure. Now, it may not have been like a runaway success that you're going to double
Sure.
down on, but you learned
Mhm.
something and you can use that to
But
build on the next thing.
and if you couple that with that agile methodology, which is like really that decomposition of your denominator into the finite chunks, you then force that learning in your next chunk. You're now just better at it. So it's
Mm-hmm.
like when you couple those two, I mean, I've just seen it drive some really nice results on the digital teams that I've seen using that.
Yeah, yeah.
And then switching over to what you said is on the infrastructure learning. I think the one, you know piece that I found has been a really great piece of learning is to just engage any of the existing vendors, whether those be core vendors or other loan origination system vendors, just early on in the process so that they can present the best resources
Mhm.
or you can get in schedule with them versus thinking about those things um, after perhaps a lot of focus has been spent just on the UI UX.
Yeah, talk about that a little bit. 'Cause one of the things I feel as a technologist in this space is that I sometimes refer to it as shiny object syndrome in Silicon Valley. We want the cool, sexy features, the thing people want to work on. And I think the same is true here, where there's like an emphasis on the new UX, the new consumer experience. But sometimes the plumbing, which isn't very sexy, it's often behind the walls, is the thing that actually delivers the experience. Talk to me a little bit about what you're seeing on that front in terms of people that are doing it well and how they're making those investments, not just in the brand new origination experience, let's say for a loan, but how that plugs into the broader ecosystem that the bank has and uses to support their customers.
I think you said the magic word where ecosystem, where we're really starting to see the people who are kind of adopting in the transformation side fastest is the realization that it is a broader ecosystem. There are already many services being provided by their core vendors and other
Mm-hmm.
providers, and if they could, you know, get the most juice for the squeeze there first, it allows you from an innovation portfolio perspective to
Mm.
just reduce the risk and now perhaps take more risk in certain other areas because you're not kind of completely rebuilding everything, right?
Mm.
But I think people, going back to that agile methodology, if you're not thinking about it in that way and you're perhaps in this longer waterfall type approach, well, you then start thinking about things like integration in a very siloed. You're never really going to think about
Mm.
it in a, well, actually, if I'm able to retrieve details on our customers across all of their
Mm-hmm.
assets and liabilities with us, what are now on the other side of the UI UX side of the equation,
Yeah, yeah.
all the types of things I could plug it in. But that's not necessarily been perhaps the
Mm-hmm.
way everyone has been able to think about it. But we do see kind of those lead adopters really being able to think about it. And then once you set it up that way, if you think about it from another dimension of how much do you yourself as an institution want to own, and how much do you instead want to work with ecosystem partners, perhaps like a Sandbox Banking or others, where it's a, hey, if I now work with them, I can get even more connectivity into the ecosystem. So we're
Mm-hmm.
starting to see people realize, oh, as part of my innovation portfolio, I can include that, network thinking on the infrastructure as well.
Mm-hmm.
Uh, and it's been really fun to watch.
This is a question that I've always struggled with in terms of understanding the bank ecosystem. So I'm curious what you see the technology and maybe more than technology, maybe I'll say data ecosystem within an institution, which is like, is the core really the central thing? Are there flows? I'm hearing some about some banks going, from an LOS into a CRM and not having the core be the center. How do you
Mhm.
think about? Are there data lakes or data warehouse? My wife was actually asking me the difference between a data lake and a data warehouse. And I didn't have a good answer for other than one's a big building and one's a big piece of water. But this question of like, are they building a data layer that's outside of the core so that they can easily plug lots of stuff in? Are they really still using the core? What are you seeing as the trends around that data ecosystem? Because I'm curious, and I don't feel like I've got a good answer. People ask me, expecting me to know, and I don't know. So I'm going to ask somebody who deals with this more than I do and see what you say.
I think so at the end of the day, it's still fragmented, right? If you want to build a full service institution, you
Mm.
end up needing services that are generally across provider. And quite often, like if you're now super successful, are targeted at different end banking users,
Mm-hmm.
even, right? So it just becomes it's almost
Mm.
my co-founder likes to say, if you if you're successful and you're growing, you're probably looking at even more integration points and even more nodes by virtue of you being successful, right? Unless unless perhaps you're SoFi and you can just buy everything, or you're JP and you
Yeah,
potentially
yeah.
have the option of building. But even there, you're seeing just the innovation portfolio has to be diversified. You just can't do everything. Like you're not going to be able to do everything in Web3.
Yep.
You're better off partnering. So we are seeing even that just be a like a portfolio effect. But going back to your point in terms of the data, right? The data still lives in silos.
Hmm.
So one of the things we really encourage our customers to think about is think about it in terms of what does the end banking users need, right?
Hmm.
Forget where the data lives today. With tools like ours and increasingly with what the core providers and the system vendors are doing in terms of making it easier to interconnect, that's getting better. But then now what's the business value, right? If you knew all of my holdings across insurance and et cetera, what can you now achieve? Um, but those still live in different systems. We're seeing a lot of what you described in terms of hybrid core strategies where perhaps to for some of the components that you're trying to move faster on, um, those are actually being held in perhaps a new
Hmm.
core. um, where I think the piece which has been the most interesting is, and I'm sure you guys, and I've heard some of you guys talk about it, is the actual advent of banking as a service,
Hmm.
where even with this fairly fragmented setup, you're still able to offer those in a microservice architecture externally to both fintechs,
Hmm.
as well as increasingly other types of partners like
Hmm.
yourselves. Uh, so,
Yeah.
going back to actually answer your wife's questions, it, all of the above,
Yep.
right? Where we've seen customers starting to build on things like Snowflake. So
Hmm.
we're definitely seeing everyone do what all other industries are doing and adopt cloud. It's the same trend as with code. It's whatever
Yeah.
is the best of breed. We're seeing people adopt it, but it's generally I've seen not necessarily it be a complete replacement for their banking specific
Mm.
technology. It's normally a complement or to empower staff
Hmm.
to use a modern CRM and to engage customers, right? So perhaps it's replacing an existing legacy CRM they're using, but it's not replacing their underlying core
Yeah.
banking servicing system because Salesforce
Yeah. Yeah.
doesn't have a core yet, right?
And well, yeah, I won't speak about where Salesforce may go. They seem like they're pretty ambitious. But the thing you're saying is really interesting to me because it does feel like I do occasionally hear bankers or bank technologists thinking about one system to rule them all, right? This kind of vision of this monolithic thing that will kind of do it all. And I feel like what you're saying is accept that that's not going to be the reality and figure out how to deal with the world in which you're going to have different systems. And some of them are going to have to speak to each other for you to be able to present a unified view across assets to the customer or to a bank employee who's servicing a customer. And so you get like that vision of one thing to rule them all really isn't there. And that of course it frees you up to think about what's the best solution for this problem, not the solution that kind of does okay at every problem that I
And
want to
and
solve.
as and in the I think I was looking at this, and in a time frame that makes economic sense for us,
Mm.
right? Which is the other part of the slider, because if you give up the idea of one thing to rule them all, let's say, okay, well, if it's for me to solve this problem, how quick can I go now?
Hmm.
Because I don't have to worry about solving
I can solve
every
everything. I can
hypothetical
just do
problem.
one at a time.
Yeah. And then when I'm ready, merge it back. Right.
It seems like that puts a real premium on the ability to connect these systems you've got together either at a data layer or at least at the presentation layer for different use cases, whether again that customer's online banking experience, that banker in the branch when you walk in and they want to know that you have a mortgage and a car loan and a deposit
Mhm.
account, and those are in three different systems. You got to somehow bring those together. Do you
Yep.
have any advice around how to achieve that? That feels like one of those things you gotta get right, but it is non-trivial.
I I think this goes up, and I think one of the approaches back to what we were saying earlier. I find 80/20 rule is
Mm.
a good rubric there because we've seen so many people get hung up on the, I think, like, the
Hmm.
example of what do you do if a person who originated online now wants to come in branch and pay in a hypothetical situation. So it's a, okay, we could sit here and focus on that, or would you really just like to know when this person just got a very, very large transaction and has also been on your website looking for home loan offers, right? Is it
Hmm.
which is happening more often for you? Which would you like your bankers to be able to quickly respond to? And I think that having the ability to be able to
Hmm.
stand up and say that internally, to say, hey, it's okay that we won't have the solution for everything, but perhaps we can iterate on it with these new tools faster, it is different, right? Perhaps that hasn't always been necessarily the culture, but like you were saying earlier, that for the ones that are moving into that more agile thinking framework, we are already seeing that work. Even when it comes to the presentation of how do you think about a customer 360,
Mm-hmm.
maybe you can start with a very small niche group and see what makes sense there and
Mm-hmm.
what were the issues, and then let's expand the pilot to a broader population, right?
Yeah, yeah.
So
Yeah, well, it just reminds me of the reality. This reminds me of, no roadmap ever survives contact with the customers. Like, you think they're going to want
mhm,
X, and then they don't, and you never learn until
yep,
you're in market. So that
yep,
80/20 rule of like, what's the most value? What are we really trying to achieve? And then how do we learn most quickly so we can find our way to achieving that value, as opposed to
yep,
the big list of requirements up front. That's 100%. What's the 20% of effort that gets us 80% of the stuff? Well, let's start with that, and then let's see what
yep,
is the best next thing to build.
yep.
Any other high level trends you see, or things you hear from customers? And then I've got a different question for you, but I was curious if there's anything else on your list.
I think it has been interesting, like your questions around the strategy around that core and just
Mm-hmm.
around, I think, what does banking as a service mean for them?
Mm-hmm.
It's just been the thing, it's been picking up, I think, more and more just over the last 6 to 12 months. I think that that's just an area where we just expect to see continued innovation, um, just throughout the ecosystem. It's probably some of the most interesting stuff we've seen in the
Can you
last.
define for me banking as a service? I hear this term a lot, and depending on who I hear it from, it kind of means something different to them, at least in my interpretation. So when you say you're seeing more work around banking as a service, what specifically are you seeing, and what's the most exciting stuff you're seeing in that space?
So my co-founder Sky, you know, from the whole software is eating financial services back,
Mm-hmm.
if you believe in that. So he defines banking as a service. Right? It's basically just the production and consumption of financial services by APIs,
Okay.
right? It's just and so you could say that, hey, a bank using its internal systems to talk more effectively to each
Mm-hmm.
other is a type of banking as a service. Or you could say, hey, actually, no, it's the bank using its FDIC charter and exposing APIs to an external party that's using the
Mm-hmm.
information to sync it. That, again, I think it becomes, like you kind of said earlier, it depends on who you're asking. But for me, I kind of fundamentally think about, if I was a banker looking at this, it's okay, well, I'm doing a whole bunch of things that I'm already doing on brand.
Mm-hmm.
Some of those perhaps I can use my technology to, really partner with the underlying businesses who I'm helping or the
Mm-hmm.
underlying consumers by offering them APIs. I mean, all of us have more and more piece of technology that just, I don't know, like that's what the future is moving to. Or it's for bankers who say, hey, perhaps we don't always have the internal capability to do some of those
Mm-hmm.
things. We're actually much better focused in a certain portion of what
Mm-hmm.
we do, which is servicing the relationships we have. Perhaps there, this is a way to attract more revenue or reduce costs by partnering with fintechs that need that
Mm-hmm.
banking FDIC charter or access to the rails, right? So I really see bankers starting to think about it. I think there's that spreadsheet that's out there on Twitter. There's only 65 of them today, yet there's 11,000 banks and credit unions. We expect those
Those numbers
numbers
to
to start
converge.
converging,
And
right?
what is the 65? The spreadsheet that's I'm gonna have to go search
So
on
I think
Twitter.
there's the number of banks that are out there that today,
Have some sort of a
you
banking as
can
a.
banking as a service where you can use their charter to start, opening accounts. Some of them are offering lending. So I think these are many of the, Cross River. So many
Mhm.
of those other names that you would hear associated banking as a service. So it's still just a very small section
Yeah, yeah.
uh, of just the U.S. market, right?
Yeah, that's true. And I think there are, yeah, any number of banks that I talk to that I wouldn't have thought of as wanting to partner with fintechs or wanting to provide that back end infrastructure in banking as a service that are getting into that game and trying to. You said something else was interesting, which was thinking of internal connectivity as kind of banking as a service, and that reminds me a little bit of kind of the famous AWS Amazon approach, where they
Mm-hmm.
kind of the different business units kind of treat each other not quite like external customers, but close. and kind of that's how they end up
Mhm.
with things like AWS, where the service I built
Mhm.
for my internal
Yeah,
user was built as something that could be used by an external
yeah,
user, and then it's both, and that service kind of stands on its own. And I imagine there's a lot of
that's
pieces like that within banking that you
mhm.
can see operate that way. I'm curious if there are examples you've seen of people who are actually doing that, where they're starting to almost API
Yeah.
enable between units and let them unlock value outside of the
So
business.
so I can't
None of
I
use
obviously
names. Well,
probably
witness
can't
protection.
I can't use their name, but so one of the customers, and this is very prototypical of how kind of they a lot of times we work with them is the first thing was they are connecting their loan origination system, which is allowing them to allow online applications on their own brand. They're connecting that to their
Mm-hmm.
core to facilitate real-time data movement back and
Mm-hmm.
forth. That whole thing is now exposed via API. They're using those APIs to now accelerate the rate at which they can buy loans from other
Mm-hmm.
banks. And we use that same API to now not just have loans originating on their own brand, but being able to buy loans from other banks, partner with hopefully other partners like Upstart to again increase the amount of origination that they're able to do in say certain segments that today they're not originating themselves. Um, so and now the last part of what they're doing is they're actually taking those APIs and just like you said, going out to other fintech partners that are also originating
Yeah, that
along the
need the same
criteria that they've
capabilities that
defined.
they've built for
So
themselves.
it's the exact same API endpoint. It goes to the same stages within, various systems that they have for their staff to review. It uses the exact same underlying AML, KYC rules that they're using, and
Mm-hmm.
when it finally ends up in their core and needs to be reported, it follows the same guidelines that they've been using for existing reporting. So it also is great from their internal perspective as they're not technologists. So when they internally need to report, show their board, it's hey, look, we're using it to gain automation and stuff we were going to do anyway. And as crawl, walk, run, it allows us to gain confidence into teams that are doing this, and start exposing it. So it's actually been really fascinating to watch as an approach.
Interesting. That's fascinating. And you may not have an answer to this, but it seems fascinating to me because you're talking about the ability to both, in some cases, consume external expertise or capabilities that you can have. And in some cases, externalize and display capabilities that you do have. And it seems to me like different institutions could be for the same item. One
Yeah,
time you're saying, hey, that's not me bringing
yeah.
it from the outside. Another place you're saying that is me,
Let's
externally make it
let's take a
visible to the
specific.
exile.
Let's make it even more specific. Perhaps you're a
Yeah.
bank sitting near a coast. Therefore, your flow for certain coastal recreational vehicles is your profile is just very
Mm,
different from somebody inland, but perhaps that person's exposure to
sure.
farm. So, from it allows almost each one to start specializing in what they're really good at, but then also when they hit limits, offload that faster.
Connect. It makes it for a really interesting conversation, I would think, for the bankers of like, where do we want to be the receiver and where do we want to be the sender?
Yeah.
And how does that, to your point, shift maybe in the context of changing macroeconomic conditions or
And if you can
other stuff?
hopefully now do that versus in the older world, or immediately in the old world was we needed more people to effectuate that shift. Today, of course, you need people, but given where labor markets are, you just can't afford many decisions to require as many people anymore, right? It's just
Mm.
fundamentally not feasible. So it's been really interesting to just see them say, oh, wow, these are just different tools as we build business cases for some of our strategies. So it's been really fun to watch.
So I want to briefly, before we run out of time, flip the core of my question has been kind of like, what are the positive things you've seen? Let me ask you this: what are the two or three top things you've seen that have led your partners, your customers, or other institutions you've seen down the wrong path? Like mistakes is maybe a harsh word, but mistakes to avoid, or things that are kind of like false starts that you say, hey, here's something to watch out for, something to not do. Sometimes I think we learn the most from the things that don't work out well versus the things that do. So what are things you've seen that like are kind of watch out for and maybe don't go down this path?
I think some of these are definitely that shiny toy syndrome of is it just because everyone else says it's the right thing to do you really need to do
Mm,
it? And what are you saying no to by and sometimes it's like,
Mm.
that focuses too much on the UI UX, or not necessarily thinking about kind of, what could you just do in an MVP, learn, and then say that you'll get better, versus delaying your
Mhm.
releases too much just because you thought you were right the very first time. So I think that that idea is just one that we see really hurting people. The other
Mm.
one I find is, um, not necessarily thinking about what the staff experience is going to be, right?
Oh, interesting.
Where it's obviously the goal of many of these things is to succeed and be successful, but then if it's that means you're just adding more load on people and not giving them time to learn. Obviously, all of us learn differently. Some of us learn by doing, some by reading, and I often find there's not enough investment in that adoption part of the innovation cycle.
Mm.
There's too much spent on the, hey, let's design it, let's get it out. But then it's well, you could probably have had something that was 5%, 7%, not as good. But if you'd spent a little bit more time, like just getting that buy-in and getting people comfortable giving you feedback and showing them that you're going to act on it,
Hmm.
I just see 1 year out, people in a much better seat than those who had spent, I think I
Interesting.
could get this perfect thing, but then just didn't really you didn't have time left to spend with training, right? Because you were so fixated on
Yeah.
that you'd get it right. Um,
In the feedback from the people in the field, not just feedback from did it work or not, but like how do I actually support our customers, our staff.
mhm,
That's a really fascinating one. And I want to go back. I think I love this point you made. We do this all the time, but the idea of framing the trade-offs, of understanding the opportunity. It's easy to like, here's a list of stuff we can get done this quarter, and forget like, and here's all the stuff that we think we'd like to do, but we're not going to get
mhm,
done. Because at some point you're saying, I'm going to do this, and you got to know, instead of like what could I
mhm.
have done.
Yep.
We do it on a quarterly basis, but I think sometimes it really helps you frame in on like, what is the value I'm getting, and I need to justify it because there's this other thing
Mhm.
we could be doing with the resource, the time,
Yep.
the energy. And I think it can really clarify your thought.
Mhm.
We sometimes talk about in terms of trades.
Yeah.
We could trade X for Y.
Yep.
Is that a good trade? And
Mhm.
whichever way you go, you're
Mhm.
making a trade. You're always trading X for Y. It's just whether you pick X or Y. And so I think sometimes that's a really great framing. I love that sense of
And
really understanding what that opportunity cost is.
I think and part of, as I was learning about this, is I think from when you were at Google, that whole concept of, is it committed or aspirational, and having that discussion earlier on with folk to say,
Mm.
this is committed, meaning it's okay if you then have to, we know this is aspirational, so if you have to flex there, but this is committed and you have to, but letting them know upfront on those, versus, you know things will go bad in a project. You're going to run into
Hmm.
unforeseen things, but letting them know ahead of time, hey, then let drop these. Let's not have to completely, in the midst of the, you know, stressful time, have to
Yeah.
rethink everything. But this was aspirational. It's okay. And because we live in an 80/20 world, we can come back later and fix it. Right. So I think it's,
Yeah. What are the things that really have to
mhm,
get done? What are the things that are nice to haves
yep.
and can be? Yeah. Interesting. Well, Ravi, I've enjoyed this. I have the same three questions I use to end the podcast for everybody. So I'd love to ask them to you now and just get your thoughts. Um, the first is, what's the best piece of career advice you've ever gotten?
Go do what you're passionate about.
Go do what you're passionate about.
If,
Okay.
yep, it was basically,
And how did that lead you to what you're doing today?
I think it was when me and my co-founder were working for Harvard University's endowment, initially building software to help portfolio
Mm.
managers. I think for us, it was always, how can we use the technology we're building to show just regular people, like, my parents or my co-founder's sister, you can actually access data and make intelligent decisions yourself. So it was one of those, we really wanted to show how the people who didn't think that they were developers could use technology and use data to get those insights. Yeah, and
Mm.
it's led us to leave Harvard and start this company, and what's eventually really led us to build this low-code integration builder for bankers.
Love it. So my second question is, uh, what's the best advice you've ever gotten about the consumer lending, consumer banking space? And this is probably for you a bit like for me, like a space you came into later in the path.
Hmm.
And
Hmm.
so maybe a more recent learning, but I'm curious what the best advice for learning you've had about that space is.
I think it's actually like in the same analog as what you were saying earlier, right? What keeps driving my like 80/20 rule is that you really just need to get this into the hands of that end user, because you are definitely not going to be able to predict all the ways that they're going to end up doing this thing or using
Yeah, yeah,
it.
yeah.
It's like I'd rather just get into their hands and get that feedback versus hypothesize, because some of the most
Yeah.
beautiful insights are from when it meets the hands of users, um, than
In
anything
the
else.
tech world, there's nothing quite like watching a designer watch a user use their product and
Yeah.
go, yeah, yeah, that's no, no. Why would you do that? No, why would you click that button? Why did you? And you go, the users have their own perspective, and you never really know what it is.
And I think for bankers, as we think about this digital transformation, right? I think in just like for me, that was a skill I learned later in my career, like working in portfolio management. Like that wasn't necessarily something I'd ever done.
Mm,
So when it's some of it goes back to that, but then when you teach the bankers, by the way, that's why we're telling you to do this. If you get good at this, you can just keep doing this and iterate with your tools, and you'll just get better and better.
mm.
But that does require you to just look and watch and see how the customers are using it, which
Yeah,
wasn't
yeah,
necessarily always something that they were tasked with doing, right?
yeah, yeah. It's a different muscle.
Yeah.
All right. So last question. What's one bold prediction for the future?
Ooh,
I've only stumped one guest with this. He just forgot to prepare a bit. One bold prediction about the future.
I think we'll have a central bank digital coin in America in 2023.
In 2023, that's a bold prediction. I feel like you're going to get an invite back to see if you were right or wrong. I will wait for the central bank digital currency in 2023. That feels like an interesting, it's a good bold prediction. And we didn't even talk about crypto today. We can come back and do that another time. But Ravi, thanks so much for joining today, sharing your insights. It was a really fascinating conversation. I appreciate you making the time.
Thanks so much, Jeff. I appreciate it.